Hi everyone and welcome to the Financial Fox TV show. What we are going to talk about today. We will be discussing gold, investment opportunities and strategies, and also alternative investments such as cryptocurrencies. I will be joined by Amanda van Dyke, Managing Director at ARC Emerging Market Partners. Amanda is a precious metals expert. She's a former gold fund manager and also ex-chair of Women in Mining UK. Let me connect to Amanda. Hi Amanda, how are you?
Hi, I'm good. How are you?
I'm fine. It is great to have you back on the show.
It's good to be here. It's nice to be sort of getting a little bit back to normal.
Exactly. I remember I spoke to you in March during the lockdown about gold, and at the time gold prices were having an impressive bull run, which it carry on and hitting record heights and attracting record investment as obviously as a hedge against global uncertainty. Maybe could you share your thought on where the market is going now and the inner economic dynamics that could shift the price of gold?
Sure. Gold, it starts with what gold is. Fundamentally, gold is money. It's a preservation of wealth. And when we're in the middle of a booming economy, there's a lot of places to preserve your wealth or to invest and to make money. But in times of uncertainty, gold becomes a wealth preservation mechanism. People don't know where the world's going to go. In times of recession, in times of geopolitical uncertainty, in times of any kind of significant future economic uncertainty, people like to have some, at least, and usually a larger part of their wealth stored in something that's a hedge against that uncertainty. Gold generally, historically, has only gone up in these times. So the question is, has it gone up completely? Are we done? I don't think so, because the economic uncertainty is here to stay. People might say, well, yeah, but the stock market's all recovered, everything's gone back to normal. But the stock market has recovered because there's no place else to put your money. Globally, bonds, savings are worthless right now. They have negative real rates of return. So we have the return of inflation, and we have zero, like you put your money in the bank, you put your money in a bond, you're not getting anything for it. So people have put their money in the stock market because it's the only place to go. But realistically, global companies have lower earnings unless you're, so the stock market's done well based on two things. One, it's the only place to put your money right now. And two, global, in the new paradigm, the new world, the only place to put your money is tech stocks, right? Because tech stocks are the only thing everyone's using is Amazon and Facebook when they're all locked in at home. And that's probably not going to go away. People realize that the internet world is here to stay. That form of tech is definitely here to stay. And they've been the big winners out of coronavirus. And so the boom has been partially led by the winners of coronavirus, and partially because people have no place else to put their money. But the reality is, for the majority of global companies that aren't Amazon or Facebook, the earnings in the last 2 or 3 quarters are going to be horrible. And there is a significant chance of another correction in stock markets, because what's underpinning this rise is not, normally the stock market goes up because the companies within the index have higher earnings, right? Like they're making more money, they're growing. None of those companies are growing right now. Except for the FANGs, none of them are truly growing. They're just where you want to store your money because you have to put it somewhere. Similar to gold, you have to put your money somewhere, but they put it into gold. But I guess what I'm trying to say is there's a significant risk of a second correction, and that just means more money is going to flow to gold. And low rates, much like during the last financial crisis, low rates, quantitative easing, getting over the coronavirus caused recession is going to take time. And throughout that period of significant uncertainty, gold should continue to perform. So I think keeping some money in gold is a very safe bet at this point in time. And I still think there's room to go.
Could the gold price go above 2,000 by the end of the year?
Yeah, I think there's a very good likelihood of that. If stock markets correct again, which they could do in the 4th quarter, when 3rd quarter numbers come out, and if they're worse than expected, there could be another tumble or correction in the stock market sometime in the third quarter or fourth quarter, I should say. And if that happens, gold, the whole stock market will come down, and gold equities and gold price might even come down with it because people have to sell their gold to buy into that. But the first to recover, in like give it 2 weeks after the crash, the first to recover is going to be gold and gold equities.
We could actually see another basically collapse of the stock market, or
I don't want to say the stock market's going to collapse, but I still think there's a very high risk of a significant correction in the fourth quarter. But either way, we're in a recession, and the economic uncertainty is here for at least 2 years. And as long as we're in a recession and there's economic uncertainty, gold is going to continue to be where people keep their money, and therefore the gold price is going to maintain itself. So I don't think you should buy any less gold because you think it's had its run. On the other hand, I think you should be prepared in the time, if we do have another correction in the markets, anticipate that gold will come down with the market initially, but it will be the first to recover. Actually, you should buy the dip.
Okay, I think it's also worth mentioning, the US election and also geopolitical tension, which can cause the metals to climb as well. What is your views on the election and how they can impact the gold price?
Geopolitics has always affected the gold price because when it's the uncertainty principle, right? So on one hand, you have uncertainty, and when uncertainty goes up, gold price goes up. When uncertainty goes down, gold price goes down. And it's the same thing with geopolitics. But in the last 20 years or so, the extent to which geopolitics has affected the gold price has reduced. So if it used to affect the gold price 10%, it probably now only affects it 10%. And that's just because of the size of the global economy. If something goes wrong in, some tiny country in Southeast Asia, or even the Middle East, that's not going to affect the global economy the way it used to. So it doesn't affect the gold price the way it used to. Nonetheless, geopolitics still affects it, just not as much. In the last election, everybody thought that Trump was a complete wild card, and that if he got elected, the gold price would soar because of the uncertainty of what a man like him would bring. In actual fact, it didn't soar because the powers that be in economics realized that Trump was fundamentally a businessman, and his primary focus was going to be the economy. So actually, for the economy, Trump was a really safe bet, if not necessarily a politically safe bet. In this election, it's quite close to call. I think that the gold price will be fine. It won't go up or down if Trump wins. If Biden wins, I'd go long gold. I'd go very, very long gold.
Okay, so that was great. We said that gold basically it remains a sound investment, and it should actually play a key role in any investor portfolio. What allocation would you recommend to investors?
I think traditionally in bad economic times, in times like this, the common recommendation is 10%. In normal economic times, when we're in a growing economy, not in a recession, it's about 5%. And so you almost double up your exposure depending on where the economy is at, and understanding that gold is kind of like cash in your portfolio. It's a bit of it's an inflation hedge. So right now, the general recommendation is 10%. Personally, I run a riskier portfolio, given my age and other things, and so I'm more exposed than that.
Okay, obviously there are different ways to invest in gold, and one is actually equities. Shall we maybe expand a little bit on that and mention a few companies on the London stock market, for example, that investor could look at? So I wanted to bring up Condor Gold, which is listed on the London and also on the Canadian Stock Exchange. What are your views on the company?
I think that, I know the deposit, and I think it's actually a very good deposit, and it should be if they get it into production, which is looking like it's getting towards production, it should have a significant re-rating and de-risking. I would take a bit of a step back and say, in the initial phases of a gold bull run, which is what we're in, you want to be in large cap gold producers because they'll run the most. The Barrick Golds of the world, the Newmont Golds, in the early part, that's where you want to be because they'll re-rate the most. But as you get into a gold bull market, the amount of extra you can get, the marginal change, like if Barrick, if the gold price rises another 5%, Barrick will probably go up 5%. Whereas a developer like Condor Gold will go up a lot more because the marginality, the marginal improvement of the de-risking and how much more money a junior miner will make in a bull market is significant. So 5% extra returns to a major isn't going to make a lot of difference to Barrick Gold. But a 5% increase in the gold price could mean 20% or 30% extra returns for a junior miner. And as a mine goes through the development phase, the high risk building phase of investment, and they de-risk and actually start pouring their first ounces of gold, that's usually a really big re-rating challenge. And the re-rate of a junior gold developer as they go into production in a gold bull market is huge. So I think I'd be looking pretty heavily at the gold developers, similar to Condor Gold right now.
So how about we mention also, for example, Hummingbird and also Cora Gold, which are also two gold stock that investors are looking at the moment.
So Hummingbird is a producer already, but they're a junior producer, they're a small producer. So an increase, going back to the old example, a 5% increase in the gold price is going to affect Hummingbird a lot more overall than it's going to affect Barrick. Yeah. So I think in a rising gold market, small producers are a very good bet. And also a company like Hummingbird is probably going to have a lot of development assets right now. So they would have had some projects in the background that they were developing that have now become economic. So something like Hummingbird will be a combination of a producer, which is a lot safer, that's going to have real sort of leverage to the gold price, as well as a developer. So a Hummingbird is great. Cora Gold, on the other hand, is an explorer and is still very much an explorer. Explorers do very well in a rising gold bull market. They're a great place to be in terms of gold exploration, but they are still significantly risky because Cora Gold has a lot of intercepts that are very good and that show that there's a good chance that they'll become a gold mine one day, but they haven't yet, to my knowledge, put out, and I could be wrong on this, a sort of feasibility study that indicate that they have economic gold that's going to guarantee them into production yet. So they're still in the higher risk investment category. If they're successful, they'll do extremely well, but there's still a binary risk to whether or not they're actually going to get to that phase.
So it's basically much better to look at the current producer or developer.
When you're investing in junior gold and exploration, you should never invest money you can't afford to lose. You can make 10 times your money in a gold explorer. And if Cora Gold hits the bonanza, and I don't know, I'm not a geologist and I don't know if Cora will, they will go up by many multiples. But generally speaking, it's good advice to say don't invest any money in junior exploration in the mining space that you can't afford to lose, because it's binary risk. They either find something they can mine or they don't. And all I'm saying is you need to be a lot more careful with junior mining investing. But as junior mining investment goes, and given a lot of the success Cora has had so far, I think that they're among the better crop of exploration in West Africa right now.
Awesome. Thank you so much for that. That was a good insight. So if investors want to play safer, let's say, it's never safe 100%. They should look at a developer or producer, or they can take a little bit more risk and probably higher return with the exploration. And I think that is a very, very good tip. Now, I wanted to hear your thought on silver, as it has been one of the bigger percentage gainers. Obviously, it has also a strong industrial metal aspect, but do you see silver breaking through?
I'm unusual in terms of people who are in the gold space. I'm not a massive silver bull. Silver has done really well And yes, percentage-wise, they've gone up more than gold has, but we're still looking at a 75-to-1 ratio between silver and gold. And I prefer to sort of talk about silver in terms of that ratio, because silver has become an industrial metal, and industrial metals are much more affected by what pushes industrial metals is global demand and supply. So when people are building a lot more stuff, because we're in a growing economy, silver does well.
Yeah.
And over 60% of silver's production these days goes into industry. So there's still an aspect of silver that's a precious metal that will be affected by the same economic uncertainty that gold is. But there's a lot more silver production in the world than there's ever been before. And a lot more of that production goes towards industry. So I don't think it's going to, the truth is, I don't think we're going back to the day, like the real silver bulls think we're going to go back to a 40-to-1 or a 60-to-1 ratio between silver and gold. I don't think that's going to happen. We've gone from 80 to 75, and we might even go to 70-to-1, and gold and the good silver producers, the good large-scale silver producers are going to do really well in that environment. But I don't think we're ever going back to, as I said, 60-to-1 or 40-to-1, which are what the major silver bulls are looking for.
Okay, let's talk a little bit about alternative investment, because gold from one side is one investment that is not related to the current financial market and the stock market, but also there are some other form of alternative investment, for example, cryptocurrencies, which has been quite popular over the last few months, particularly Bitcoin. I would like to understand what are your views on cryptocurrency. How do you see them, and if actually could be a good time for some investor to take part in this journey, let's say?
So I can't claim to be an expert on cryptocurrencies, but what I will say is I personally view cryptocurrencies as millennial gold. For all the reasons that people invest in gold in times of uncertainty, it's an asset that's outside of to some extent outside of the financial system, that you can hold it, they feel like it's real, and it's not connected. It's an unconnected wealth preserver. Gold's 2,000 years old, right? People have been using gold as money for 2,000 years. And
even
money,
before the money, even before.
And fundamentally, money is just something in which we store wealth, or our belief in wealth. And so gold has always been money. And in some cultures, that concept of gold as money is still very, very strong. In China, in India, gold is absolutely money, and it is a preservation of wealth. And every single family that can afford it has some gold coins or gold bars, if they're wealthy enough, stored away for times of uncertainty and trouble, and they constantly save a percentage of their income in gold. So that status of gold as savings and wealth preservation and real true money, inflation hedged money, is very heavily entrenched within many parts of the world, and is still part of the global financial system in terms of it's tradable, it's accessible, it's got ETFs, and so it's a very easy thing to trade in. Gold companies, you can trade them on the stock exchange. So the ability to access gold as an investment, as a financial hedge, is much more available to the world. Or you could just, you can buy a coin and put it under your mattress. That's harder to do with cryptocurrencies. Nonetheless, that sense of gold as money, as security, as an inflation hedge, that doesn't exist again with millennials. For millennials, Bitcoin is very, very real. And for them, they'd rather own a Bitcoin than an ounce of gold, right? And they're a smaller part of the economy, but a smaller but growing part of the global economy. And they understand cryptocurrencies. So I think Bitcoin is here to stay, assuming it doesn't get legislated out of existence, and cryptocurrencies and the blockchain alongside it are something that the new generation, both in China and in America, understand very, very well. And as people become increasingly distrustful of of the global economy, of the global system, they want alternative forms of secure wealth. For the majority of the world, that's still gold. But for a significant and growing part of the world, that's cryptocurrencies. So I think that they're here to stay. And if you know how to play them and you know how to do your homework on them, some cryptocurrency investments could be very good for you.
And I think it's also important to mention that there are upcoming many projects. They are also investigating the concept of decentralized finance. I mean, what you mentioned before about you can trade gold with ETF, there are different ways that you can do that. Obviously, we are not at that stage with cryptocurrency, but it's kind of starting, because coming up different ways that you can actually make money even with your Bitcoin. You just don't have just to hold them in your wallet, but you can actually now borrow them, lending them, and make money and with interest.
Yeah, and that's what a sort of advanced financial instrument is. And gold is very established, but I think that cryptocurrencies are on their way to establishment, and they definitely have a consumer base. So I think discounting them would be unwise.
Amanda, thank you very much. That was great to hear your thought on gold and alternative investment.
Not a problem. I was very happy to join you. I hope you have a wonderful afternoon.
This is everything from the Financial Fox today. I hope you enjoyed this amazing chat between women and investment, and subscribe to our channel to keep update with our news and amazing interviews. I will see you next time.